This is February 28th of Backroads of Agricultural Edition. I am your host, Cesar Delgado. For today, this is your agricultural storyline. A governor of Midwest states, they support for year-round B15. Ethanol industry is supported by the measure by these proposal by those governors. I talked with Mark Schlusiner from the Department of Agricultural Field Office in Springfield, Illinois. Mark tells us that the farmlands is declining by urban development in Chicago's suburbs and Bloomington and Normal area. This is your commodity markets update on this morning. The corn market was higher for yesterday's rally in the Board of Trade. Soybean complex was pretty higher than previously days ago by bringing the above average temperature in Brazil's agricultural growing area. This is your agricultural commodity markets update minutes. The commodity classic are underway for right now alongside with the equipment and supplies to the convention in Houston, Texas. I will interview with Ben Brown from the University of Missouri and Columbia. Stay tuned for this. I am your host, Cesar Delgado. You do want to keep in right here on Backroads of Illinois. I'm Cesar Delgado from Backroads of Illinois. I am joining with Ben Brown from the University of Missouri. Ben is an economist at the University of Missouri. Welcome to the show. How are you, Ben?
I'm doing fine. Thanks for asking.
Let's start our conversation with the export of beans in China. What is your sources from the University of Missouri and the United States Department of Agricultural? Could you tell our audience?
Yeah, so we, even here at the University of Missouri and the Food and Ag Policy Research Institute, we do use USDA reported data for our current period and historical analysis. So those are taken from a variety of different sources to kind of track during the season. So like right now for current marketing year export sales, those are calculated by reported sales to USDA that then USDA aggregates together and shares every week. And then every couple of, every month, but it's delayed 2 or 3 months, we get data from the US Census Bureau. And the US Census Bureau is tracking sales at ports of entry and exit, both for imports and exports. And so we can kind of collaborate, we can cross collaborate those to make sure that they match and that we have an accurate reading. For forecasted exports, we use a series of economic tools at our disposal to kind of then think about needs around the world, production trends, and how much exports we might export from the United States to different places around the world.
How do you see impacting the net income for this year? Many commodity prices are currently seeking $4.07 for right now alongside in the corn cash market.
Yeah, so we have seen prices fall pretty quickly here over the last, I'm going to say 2.5 months. Part of that is driven by excess of supply. There was large production here in the United States, record corn production on our national record yield. And we also have seen some strong production in South America, even though we've seen estimates fall from what was initially anticipated. South America corn and soybean production is still anticipated at record levels for the current year. Couple that with some slowing economic growth in China and transportation challenges, whether that be low water levels on the Panama Canal, raids and conflicts in the Red Sea. That leads to longer shipping routes and more expensive trips for shipping bulk commodities into Southeast Asia. And so that's partially what we've seen with a declining in price. As that fits into farm income, even the 2023 crop, which came out of the field last summer that we maybe had anticipated was going to have a little bit higher of a profitable picture. I think we're starting to see that a large portion of U.S. corn and soybeans didn't get sold at harvest, was put in storage units, and is being sold now at a significantly lower price. And so that crop, that 2023 crop, relative to farm income expectations, isn't as strong today as what we maybe would have anticipated a couple months ago due to kind of some storage decisions at the farm gate. As we think about going forward, we certainly see declining working capital on farms due to these lower prices over the next several years. That's going to increase, debt service at farm levels, maybe put a little bit more farm stress, financial stress into the system. With that being said, we're coming off some very strong years of farm income and government payments that have built up working capital. And so for most farms, we do not have a solvency issue to where they do not have the assets to pay for long-term debt, but we might be running into some liquidity issues, finding it challenging.
Could you explain to our listeners as a hog producer in the Midwest?
Yeah, so China has been the growth area for U.S. pork exports for a decade and a half. We've seen it flatten out in recent years. Then it kind of saw a little bit of a spike when China was dealing with their African swine fever, reducing their pork production. And so we've seen some challenges and changes within global pork trade. U.S. pork trade certainly depends on the Chinese market to some extent because they are such a large global consumer of pork. However, our biggest market is Mexico. And so we really depend on that market to drive our pork exports. And so while we've seen some flattening in the Asian market, we've been kind of fortunate that Mexico continues to buy pork and consume pork.
Do you have any final thoughts on the farm net income and trade export?
So trade represents, at least a third of many of our major commodities demand picture. And so making sure we understand trade and logistics, geopolitical tensions, as we think about prices moving forward is important just to kind of help withstand this downturn or this decline in commodity prices in the United States, and using this as an opportunity to build new markets overseas, maybe find a way to start building product demand in countries so that as they grow and their incomes get stronger, it supports U.S. farm income down the road.
Thanks for coming. My pleasure that you joined the show for today. Thanks. You're welcome to join the show anytime, Ben. This is Ben Brown from the University of Missouri and the Agricultural Department in Columbia, from back roads of Illinois. I am Cesar Delgado. Have a good day.